good day to all the current and prospective investors of Baroda BNP Paribas Mutual Fund. So what I'll take you through today is our thoughts on markets. So when I first look at indices, broadly when I look at it from a very top-down view over the last 1 year, that is from say mid-April now to going back a year, I find that the market is looking like more like an inverted teacup. In a sense, if I look at it from a capitalization perspective, the large and small cap indices are up about roughly 5% over this period, whereas the mid cap is up about 10%. So overall, it's been a little bit of an anemic year in terms of returns for markets. One of the key reasons for it is the next point, which is on flows. And when I look at it from a flows perspective, from say roughly if I look at 2024 calendar year, 2025 calendar year, and the half year that has almost transpired now, you look at the domestic flows that has been at an amazing level of about USD 180 billion over this period. So they have added to equities by almost about 180 odd billion, whereas foreign investors have taken out roughly about 33 billion out of Indian equities. Which brings us to the point of why is there such a dichotomy? Obviously, the domestic investors are largely more territorial to that extent, in a sense that they are more contained among the local markets. Whereas when we look at foreign investors in the foreign pools of money, the first thing that comes to mind is that broadly, there are better alternates. MSCI India, for example, has been lagging MSCI emerging markets, which means that India within emerging markets has not done so well. The other part is that MSCI emerging markets has also lagged MSCI World. MSCI World typically gets dominated by the developed markets, and that market has done better than emerging markets, and which in turn has done better than India. So to an extent, what has happened is that India has trailed other indices. The second part, which is also to be borne in mind, is that during this period that we spoke about equity indices, currency has also been a little weaker for India. Over this entire cumulative phase, the INR has depreciated by almost about 11%, which means that dollar investors are actually lost out on the currency trade as well. The third thing is there is also an element of FII taxation during this period, which means that whatever indices are reflecting, the post-tax return is even lower than that. So broadly putting it in context, returns have been weak and they have been better elsewhere. Now, when we come to the reasons for it, see, the fundamental factor is India is an energy hungry country and it needs energy for growth. So we are large importers of crude and gas. And whenever there are shocks in the energy market, that immediately impacts sentiment towards India. And that is precisely what West Asia has done for India. So this entire shock that has come about in the West Asian markets has meant that India has been a little out of flavor for foreign investors. So what is the implication of West Asia? It's a natural follow through of questions. Now, when we look at West Asia, and I will first outline my assumptions on West Asia because it's a very dynamic situation out there. I would broadly say that our underlying thing is that given that there are a lot of peace efforts underway, we think that for 1 quarter you could see disruptions in energy market, and our base case is that crude moves up from that $60 to $70 handle to about $80 to $90 handle on a sustainable basis. Now, basing ourselves on that assumptions, I would say that we should be looking at about 20-25 basis points of lower GDP growth. We should look at our current account deficit widening by about 40 to 50 basis points of GDP. Also, our monetary policy will likely look at a long pause from here on. So that is broadly on the economy side. On markets, I would say where we were at the beginning of the year at about 15% kind of a earnings growth, we should probably look at somewhere in the 10 to 12% kind of an earnings growth trajectory for India, given this kind of a backdrop. So that is broadly the sum and substance of the entire West Asia conflict. Having said that, what sectors actually look appealing in this context? So one part is there are certain areas which continue to look fairly reasonable, which is like things like utilities, for example, some parts of consumption, for example, because to be fair, India is largely a domestic driven economy. From a overall consumption basket, only 10% is linked to more to export, so it should not be so material for India from that aspect. Although any kind of energy shock will act as a little bit of a break overall. So one part is these are aspects that look fairly decent to us. Pharmaceuticals is something that doesn't get impacted by all these vagaries. What is neutral could be areas like telecom, and what could get impacted is obviously downstream oil marketing, which will get impacted. Some parts of chemicals, some parts of energy hungry intensive industries, cement, etc. could see some margin downticks as a result. So that's where we are. So what is the broad case for India and how are we viewing markets now? So one thing is that despite the tone down in GDP growth, we think India will still remain a fairly buoyant growth. We should be landing somewhere between the 6.5 to 6.9% kind of a GDP range that we are looking at. The second part I would say is that the valuation froth has completely drained off India. We are now in sync with our long-term averages. So in a sense, valuation froth going out, and now the case for India is looking fairly better from where we were, say, September 24 when we had peaked last, because there was a little bit of valuation excess in markets then. So that's where we are at this point of time. What areas look interesting at this point of time? I would say if one way to look at markets, the large cap spectrum, which has seen a brunt of FII selling, is definitely looking far more amenable right now in terms of valuation. Also for some slightly more risk averse categories, I would say some things like balanced advantage category could be a fairly interesting proposition. So that's how we are looking at markets at this point of time. Thank you so much.
Mutual fund investments are subject to market risks. Read all